Hello and welcome back to the U.S. Guide. My name is Ivy, and today I have to discuss with you about something that impacts every single person residing in the United States. Whether you are a citizen, a green card holder, a visa holder, or a new arrival, April 15th, 2026 is only 14 days away, and this year the IRS has modified so many regulations that even tax professionals are finding it challenging to keep up. If you are 65 years old or older, or if you have a parent or grandparent who is 65 or older, please pause what you are doing and give me 15 minutes of your time because what I am about to describe could save you thousands of dollars, safeguard your credit, and keep your home secure. I am not here to frighten you. I am here to provide you the facts so you can take action before it is too late. If this video assists you, I am going to request you for one favor. Subscribe to this channel, tap the notification bell, hit the like button, and share this video with every senior in your life. This information is complimentary and it could transform someone's situation overnight. Let us get started. First, let me describe why this year is completely different. In 2025, Congress enacted a substantial law called the One Big Beautiful Bill Act. This law established several brand new tax deductions that apply starting with your 2025 tax return, which is the return you are filing right now during this 2026 filing season. The biggest one for seniors is called the Enhanced Deduction for Seniors. If you are 65 or older by December 31st, 2025, the IRS is granting you an additional deduction of up to $6,000 if you file as a single person and up to $12,000 if you are married filing jointly and both spouses are 65 or older. This is on top of everything else. Let me show you the calculation. For a single filer, the regular standard deduction for tax year 2025 is $15,750. If you are 65 or older, you also receive the existing age addition of $2,000. And now you add the new Enhanced Senior Deduction of up to $6,000. That means a single senior could have a total deduction as high as $23,750. For a married couple where both are 65 or older, the base standard deduction is $31,500. The age addition is $3,200, which is $1,600 per spouse, and the new enhanced senior deduction can be up to $12,000. The total could reach $46,700. For many seniors whose income comes mostly from Social Security and a small pension, that deduction could make your entire taxable income zero. You might owe nothing. You might even receive a refund, but there is a restriction. The deduction phases out based on your income. The IRS examines your modified adjusted gross income, or MAGI. If your MAGI is $75,000 or less as a single filer, or $150,000 or less as a joint filer, you receive the full amount. Above those figures, the deduction decreases at a rate of 6% for every $1,000 over the limit. For a single senior earning $85,000, you are $10,000 above the threshold. The deduction drops by $600 and you receive $5,400 instead of $6,000. It fully disappears at $175,000 for singles and $350,000 for joint filers. This deduction is also temporary. It only covers tax years 2025 through 2028. After that, it expires unless Congress extends it. So, claim it now while you can. To claim this deduction and the other new ones like no tax on tips, no tax on overtime, and the car loan interest deduction, the IRS established a brand new form called Schedule 1A. If you are using tax software, it should generate this form automatically. If you are filing by hand or through a complimentary service, make sure you or your preparer includes Schedule 1A. Without it, the IRS will not apply the deduction. You can download the form at irs.gov. Now, let me cover the other side, the penalties, because this is where April 15th becomes critical. If you do not file your return by the deadline and you owe money, the IRS imposes you with two separate penalties. The first is the failure to file penalty. It is 5% of the unpaid tax for each month or part of a month your return is late. It caps at 25% of the balance. And if your return is more than 60 days late, there is a minimum penalty of $525 or the total tax you owe, whichever is smaller. The second penalty is the failure to pay penalty. If you file on time but do not pay in full, the IRS charges half of 1% per month on the unpaid amount, also capped at 25%. Here is the key. The filing penalty is 10 times larger than the payment penalty, 5% versus 0.5%. That is why every tax professional in America states the same thing. File your return on time even if you cannot pay a single dollar. Filing on time and not paying costs you 0.5% per month. Not filing and not paying costs you 5% per month. The calculation is clear. On top of the penalties, the IRS charges interest for the first quarter of 2026. The individual underpayment rate was 7% per year compounded daily. Starting today, April 1st, the rate reduces to 6% for the second quarter. That is better, but 6% compounded daily still grows fast. And unlike penalties, interest is almost never waived. The only way to stop it is to pay the balance in full. Now, I have some very good news. This year, the IRS made a major modification to penalty relief. There is a policy called First Time Abatement, or FTA. If you have filed all required returns on time and paid your taxes for the past 3 years, the IRS waives your penalty for 1 year. In the past, you had to know this policy existed and you had to contact the IRS and specifically request it. Most people, especially seniors, had no idea. Starting with the 2026 filing season, the IRS announced that first-time abatement is now automatic. If you qualify, the system checks your record and removes the penalty on its own. You do not have to contact, you do not have to write a letter. It just happens. This is a huge improvement and it could save many seniors hundreds or even thousands of dollars. On top of automatic FTA, you can also request reasonable cause abatement if you missed a deadline due to serious illness, hospitalization, a natural disaster, the passing of a spouse, or cognitive difficulties. You contact the IRS at 800-8291-040 or write a letter describing what happened and include supporting documents. Let me now guide you through the IRS collection process because understanding it will remove your fear. When you owe taxes and do not pay, the IRS sends you notices in a specific order. First comes a CP-14, which is just a bill, then a CP-501 and CP-503, which are reminders. Then comes the CP-504, the Notice of Intent to Levy. This is where the IRS states it intends to seize your state tax refund or other property. If you still do not respond, you receive a final notice called an LT-11, the final notice of intent to levy and notice of your right to a hearing. By law, the IRS must wait at least 30 days after that final notice before taking action. During that window, you can request a collection due process hearing and present your options. And to actually seize a home, the IRS must go to federal court and get a judge to approve it after proving all other methods have failed. It is extremely rare, but what the IRS does commonly is file a federal tax lien on your property when the balance exceeds $10,000. A lien damages your credit, blocks home sales and refinancing, and stays until the debt is resolved. That is why acting before April 15th matters. File on time, address the balance, and you can prevent a lien from ever being filed. Now, let me give you a concrete action plan. You have 14 days. Step 1. Determine if you must file for tax year 2025. A single person 65 or older must file if gross income is $17,550 or more. A married couple filing jointly where both are 65 or older must file if combined gross income is $32,300 or more, even if you are below these amounts. File anyway to claim the Enhanced Senior Deduction and any refund you may be owed. Step 2. Gather your documents. You need Form SSA 1099 showing your Social Security benefits. Any 1099-R forms for pensions or IRA distributions. 1099 INT or DIV for interest or dividends. W-2. If you had wages, your property tax receipts, Form 1098 for mortgage interest in last year's return. Step 3. Choose how to file. If your adjusted gross income is $89,000 or less, use IRS Complimentary File at irs.gov. For in-person assistance, the VITA program serves taxpayers earning under $64,000. The TCE program, Tax Counseling for the Elderly, serves anyone 60 and older, regardless of income. Both are complimentary. Call 800-968-9887 to find a nearest site. AARP Foundation Tax Aid has thousands of locations at libraries and senior centers. Call 888-227-7669 or visit aarp.org tax aid. Step 4. Claim every deduction. Make sure your return includes the standard deduction, the age edition, and the new Enhanced Senior Deduction on Schedule 1A. Also, check whether the higher SALT deduction cap of $40,000 makes itemizing worthwhile this year. If you have large property taxes or state income taxes, Step 5. If you cannot finish your return by April 15th, file Form 4868 for a complimentary automatic extension to October 15th. You can file it electronically through IRS Complimentary File, but the extension only extends the filing deadline, not the payment deadline. Pay as much as you can by April 15th. Step 6. If you owe and cannot pay in full, set up a payment plan. Go to irsgov.opa and apply online. Under the Fresh Start program, if you owe $50,000 or less, you can obtain a streamlined installment agreement for up to 72 months with no detailed financial disclosure. While you are on an active plan, the IRS will not file a new lien or levy your assets. Step 7. If you're on a fixed income and cannot afford any payments, request currently not collectible status by calling 800-8291-40. The IRS stops all collection activity. The debt remains and interest runs, but they leave you alone. Step 8. If you owe more than you could ever repay, explore an offer in compromise. The IRS may accept less than the full amount. The application fee is $25 with an initial payment, both waived for low-income taxpayers. Use the pre-qualifier at irs.treasury.gov, OIC pre-qualifier. Step 9. Protect yourself from scams. The IRS released its 2026 Dirty Dozen list, and seniors are the top target. This year, scammers are using artificial intelligence to clone voices and make phone calls that sound exactly like a real IRS agent. They contact demanding immediate payment by gift card, wire, or cryptocurrency. They send emails and texts with fake IRS links. Remember this, the IRS will almost always contact you first by mail. They never demand instant payment by gift card. They never threaten arrest over the phone. If you receive a suspicious call, hang up immediately. Report it to the Treasury Inspector General at 1800-366484 and protect your tax return from identity theft by obtaining an IRS Identity Protection PIN. Go to irs.gov and click Get an IP PIN. It takes minutes and prevents anyone from filing a fraudulent return with your Social Security number. Step 10. Track your refund. The average refund this filing season is $3,571, up almost 11% from last year according to IRS data as of March 20th. If you have filed and are waiting for your money, use the Where's My Refund tool at irs.gov.refunds or the irs2.go app. E-filed returns with direct deposit typically arrive within 21 days. Let me give you a real-world example. Think of a man named Khalid. He is 69 years old. He is a green card holder from Jordan. He has been in the United States for 22 years. His only income is Social Security of $21,000 a year and a small pension of $7,000. His total income is $28,000. He has not filed a tax return in 2 years because his friend told him retirees do not have to file. Then last month he received a CP 504 notice stating he owes $3,800. He is terrified, but here's the reality. If Khalid goes to a VITA or TCE site, a trained volunteer will prepare his returns for complimentary. With the standard deduction of $15,050, the age edition of $2,000, and the enhanced senior deduction of up to $6,000, his total deduction is $23,750. His taxable income on $28,000 of total income is only about $4,250. At the 10% bracket, his actual tax could be around $425, not $3,800. The IRS calculated the higher figure because they estimated his income without the deductions he never claimed. Once the correct returns are filed showing the proper deductions, most of that bill disappears. Then Khalid can request first-time abatement for the penalties, set up a small installment agreement for whatever remains, and his home is secure, his credit is secure, and his life goes back to normal. All because he took one step and requested assistance. Now, let me also mention state taxes quickly. Your federal return is only half the story. Most states have their own income tax filing deadline, often the same April 15th date. Many states also offer property tax exemptions, freezes, or deferral programs specifically for seniors over 65. These programs can save you hundreds or thousands per year on your property tax bill. Contact your county tax assessor's office and inquire what programs are available for homeowners your age. Before I finish, I have to give you an important disclaimer. I am not a tax attorney. I am not a CPA, and this video is for educational purposes only. Every person's situation is unique. The information I have shared is based on official IRS publications, the One Big Beautiful Bill Act provisions, and credible reporting. As of this date, tax laws change, and you should always consult a qualified tax professional, CPA, enrolled agent, or attorney for advice specific to your case. If you cannot afford one, use the complimentary programs I mentioned: VITA, TCE, AARP Tax Aid, and the Taxpayer Advocate Service at 877-777-4778. All right, my friends, let me close. I know taxes are stressful. I know the IRS feels intimidating, but you have 14 days, and that is plenty of time to take one step. File your return or file an extension. Claim the new $6,000 senior deduction. If you owe money, set up a plan. If you are struggling, request hardship relief. Protect yourself from scams, and do not let fear stop you from acting. The IRS has more assistance programs available right now than at any point in history. Refunds this year are up nearly 11%. First Time Abatement is automatic. Complimentary filing assistance is everywhere. You have worked your entire life. You deserve to keep every dollar that belongs to you and to keep the home you built. Please subscribe to this channel so you never miss a video. Hit the like button. Share this with everyone who needs to hear it. Check the description below for every phone number, website, and resource I mentioned today. From all of us at the U.S. Guide, take care of yourself, take care of your family, and file your taxes. We will see you in the next video. As of this date, all information is current. Always verify with the IRS or a qualified professional. God bless you and stay safe.